Major U.S. stock averages seesawed on Friday, gyrating between gains and losses as tech shares continued to struggle. The S&P 500 closed just shy of 3,341 points on Friday, taking out a slight gain of 0.05%. For the week, it lost 2.5%. The index has lost 5% since touching an all-time high of 3,520.25 at the end of August. The S&P 500 should still hit 3,600 by the end of the year, despite the recent tech sell-off, Goldman Sachs said on Friday. Despite the sharp sell-off in the past week, Goldman remains optimistic about the path of the U.S. equity market in coming months. The probability of a mass-distributed vaccine by the first quarter of 2021 has surged to nearly 70%, and economic data shows a continuing recovery. They also said expectations that a vaccine will be delivered early next year is the key reason it expects U.S. GDP growth of 6% next year versus a consensus estimate of 3.9%. Meanwhile, heading into a new week, the NASDAQ Composite was off just under 10% from its closing record on September 2nd. It closed down by 0.6% at 10,853.54 on Friday for its fifth negative day in 6 amid weakness in the technology sector. The tech-heavy index finished the week 4.06% lower, marking its worst week since March 20th. Unlike the NASDAQ and S&P 500, the Dow never hit record highs in its rally off its March coronavirus lows. The 30-stock benchmark remained 6.4% away from its February 12 closing record high. The index edged up by 0.5% on Friday to end at 27,665.64. Apple stock was among Friday's decliners. Shares of Apple fell by 1.3% to close the week at $112, with a 7.4% weekly slump. However, starting this week, the tech giant stock is trading in the green, trying to claw back its losses. Despite pandemic-related disruptions that will delay this year's iPhone launch until October, Apple has posted earnings that beat expectations for the past 2 quarters, powered in part by strong sales of work-from-home items, such as iPads and laptops. Meanwhile, looking at gainers, Tesla stock rebounded on Friday, leaving investors wondering if it's even still safe to ride the tech roller coaster. The past couple of weeks have been a wild ride for the electric vehicle maker. Tesla shares suffered a 21% drop on Tuesday alone, following the decision not to allow the company to join the S&P 500 index. It was the worst trading day in the company's storied history. Analysts say the decision is kind of a head-scratcher. With trillions of dollars tied to the S&P 500 index, many institutional investors would have added Tesla stock to their tracking funds, which would have pushed the stock even higher. Following its rebound later in the week, Tesla still remained down by 10.9% for the past week. Meanwhile, this week, the electric car company is extending the recovery, having gained another 12.5% on Monday. You've watched a weekly financial review with me, Anna Kasatkina. We invite you to subscribe to our YouTube channel to keep track of all the latest events on financial markets together with us. See you back soon.